let's talk about these committee moves that we have to document for you. Josh Brown, you trimmed 3M by 20%. That stock hitting a new 52-week high today. Can you take me through the thought here?
Yeah, this has been a fabulous trade. It popped up on my list of the best stocks in the market, and quite frankly, it never really left. Now it's trading, so I'm in it at 100, so I'm out at 150 and change. Now it's trading at 3.1 times sales, which is higher than the industry average of 1 times, and higher than the 1, 3, and 5 year median valuation that people have paid for the stock. I understand why. It's because the turnaround is working and people are excited, and that's why I'm keeping 80% of my position. But again, it's up 16% since January 1st. It's up 87% in the last year, 15% over the last 30 days. So I need capital to do other things. This thing's had a huge run. I'm just right-sizing the position, but planning to stay long.
Steph, you're in the name.
Yeah, and I thought the quarter was just so-so. It was kind of in line, but what was encouraging was the organic growth was double the expectations. Yes, only 2.1%, but this company hasn't grown anything organically in years. And so their guidance of 2 to 3% for the full year, really encouraging. The restructuring is actually almost complete. So if you can get that higher organic growth, you're going to start to see more margin expansion and operating leverage. And Bill Brown, I think he's in like the 3rd inning of his tenure at the company. He's got a great track record. I do think it's not as cheap as when I was buying it when it was at 11 times earnings. It's at 19 times, but I still like it a lot for the long term.
You have several moves to document here. You bought more Accenture and UnitedHealthcare.
Yeah.
UnitedHealth Group. Accenture first, why?
Well, I think you're going to need a lot more consulting from this whole AI debacle and just having companies try to figure out and understand. And this company is in a great position to do so. And they're seeing their bookings actually in consulting alone last quarter was 7%. I think you're going to see acceleration. Their free cash flow was double the expectation in the quarter. They're going to be buying back stock, increasing dividend, et cetera. And so it's also trading at a discount to its long-term total average as well. So I just think this is quality. It was on sale, it still is on sale, and they'll benefit from all of this stuff happening in AI and the unknowns.
UNH.
UNH was, we talked about this a couple weeks ago that I added to it. I hadn't known it for quite some time. #1 managed care company in the world, growing earnings and total revenue, double digits. Margins are actually probably peaking on the low side, if you will. I think margins are actually going to go higher. That's medical loss ratio. It's the inverse of margins. And I also think with a strong balance sheet of $18 billion and a new buyback program, I think there is support. So I think the setup for 2025 is really great. 17 times earnings, long-term average is 24 times.
You sold Exxon
to raise cash. Honestly, I made a little bit of money. I prefer Diamondback. I'm huge in SLB. I just keep buying that thing every time it goes down. It's now a 6% position for me. So I just didn't need another energy name. I wanted cash to be buying all this other stuff.
You sold FCX also.
Yeah, that was a bad quarter, Scott. That was just a bad quarter, and I'm tired of it, right? Their cash costs continue to disappoint. Their volumes are going down, and their guidance is kind of like, do we believe it or not? And I'm a long-term believer of copper, EV, and grid, like we just talked about, and they should benefit, but they just can't execute in good times or bad times. So took the money and ran with that one.
All right.